Welcome to this explainer. Let's dive right in. Should you actually invest in this year's most hyped space stock?
We all know SpaceX is incredible, right? But a great company doesn't automatically equal a great investment.
Cheering for rocket launches is a blast, but throwing your savings at peak IPO prices, super risky.
Let's block out that hype for a sec. We're going to break down the hard math you actually need.
Last year, they raked in a wild $18.7 billion in revenue. The catch? They literally lost $4.9 billion.
And those flashy rockets aren't even the cash cow. Starlink quietly drives a whopping 61% of revenue.
So buying in means grabbing one profitable internet business, dragging several massive, cash-burning space bets behind it.
Get this, the company's valuation miraculously quadrupled in just 11 short months. It just totally exploded.
Revenue didn't 4x. Satellites didn't quadruple either. Literally, only the public hype got bigger.
At this wild price, you're paying a staggering $94 for every single dollar of revenue they make. Independent experts value it way below the asking price. You're basically paying a huge premium for unproven futures.
So why the massive disconnect from reality? Well, you got to understand the hidden mechanics of a modern IPO.
It's basically a financial relay race. Wall Street insiders buy in dirt cheap, passing the expensive risk to you. That massive day one price pop? It's not proof of greatness. It's just the baton changing hands.
Then there's the lockup period. It's an invisible dam, stopping insiders from selling for the first 6 months.
When that dam breaks, millions of insider shares flood the market, absolutely crushing speculative retail investors. So what growth does SpaceX need just to match a completely boring, zero-effort market index fund? To match standard returns, they need an unimaginable $4.5 trillion valuation in 10 years.
That demands $560 billion in revenue, requiring a flawless 40% growth rate every single year for a decade.
You're paying top dollar for a near-miracle scenario, literally just to tie the returns of doing absolutely nothing. The smarter path? Patience. Let that initial IPO hype fade out, and wait for prices to hit reality. Always use a wealth calculator to strip away the noise and reveal the raw, mathematical growth demanded. Seriously. Don't mistake the loud fireworks of opening day for the quiet mathematical reality we just explored together. It's an extraordinary company. But ask yourself, are you buying a solid business or just a very expensive story?